S&P dips as U.S. stocks lack medium to long-term momentum. U.S. major stock indexes were mixed on Friday as investors focused on Nvidia's upcoming quarterly earnings and worried that the Federal Reserve might pause rate cuts in December. The S&P 500 fell 0.5% to close at 6734.11. The Nasdaq rose 0.13% to 22,959, while the Dow Jones Industrial Average dropped 0.65% to 47147.48. For the week, the S&P 500 gained 0.1%, the Dow rose 0.3%, and the Nasdaq declined 0.5%. Due to sticky inflation and the continued absence of key official data, hawkish voices within the Fed are growing louder, echoing Chair Powell's earlier remarks that a December rate cut is not guaranteed. The FedWatch tool shows the probability of a December rate cut has plunged to 44.4%, down from 96% in October and 66.9% just a week ago. Aside from a stronger dollar, major assets including stocks, bonds, gold, and Bitcoin are under pressure. The stock market is currently facing a triple threat: internal fragility within the AI sector, weakening rate cut expectations, and concerns over the real economy. On the macro level, valuation, financing costs, and the disappearance of short-term liquidity support are all weighing on sentiment. Investors are watching Nvidia's earnings this Thursday, the Fed's release of its monetary policy meeting minutes, and a series of missing official economic data. Caution is advised regarding AI valuation bubbles and market breadth risks. On Friday, the S&P 500 fell 0.05% to 6734.11. While the long-term trend remains upward, short-term momentum is slowing. The index is consolidating at high levels, and Friday's candlestick showed a doji small body, indicating market indecision. Signs of volume price divergence are emerging, with volume not expanding as the index nears highs. Additionally, volume on down days slightly exceeds that on up days, suggesting distribution pressure. RSI 14 is near the 50 range. Although still in a strong zone, signs of bearish divergence should be watched. The MACD histogram is declining, and the fast and slow lines risk forming a death cross, signaling potential short-term weakness. Resistance levels: R1 at 6760-6780, R2 psychological barrier at 6800. Support levels: S1 short-term support at 6680-6700, S2 key support at 6630-6650, which corresponds to previous gaps and structural support. With rising macro pressure, chasing highs is unfavorable. If the index rebounds to the R1 zone, 6760-6780, and shows signs of stalling, e.g. long upper shadows or clear RSI divergence, entry may be considered.